good morning, good afternoon, or good evening, depending on where you're watching this video and the time that you're watching this video from. Now we are talking about everything you need to know about candlesticks. Yes, everything you need to know, all that you need to know about candlesticks. Come on, Tolu, not this kind of candles, this kind of candles. All you need to know about the foreign exchange candlesticks, right? Great. Now, first of all, before we dive into the candlesticks, we need to know that in every chart we have three different type of chart views. We have the bar chart view, we have the line chart view, and also we have the candlestick chart view. But now, have you noticed that the bar chart view and the candlestick chart view, they look very much alike? Yes, they look very much alike, and this is how the three views look up close. Look at the bar chart and then look at the candlestick. Now the line chart simply shows the close based on each time frame. Assuming you're using 1 hour time frame, it shows the close of that battle between the buyers and the sellers, right? And that is simply how a candle is formed. That is simply how a bar chart is formed. It's formed based on the battle between the buyers and the sellers. Now, the only difference between this bar chart that we have and the line chart that we have is the fact that the open and the close, they meet. Open and the close, they come together, right? As you can see, the open and the close, they come together. That is the only difference between the bar chart and the candlestick view, right? Now, how is a candle formed? Now, I'm going to try to explain this using football. So I want to believe that we understand football. I don't know which fan you are. Maybe you're an Arsenal fan or a Barcelona fan or a Chelsea, Real Madrid, Juventus, I don't know. But we're going to use football to explain this, right? Now, in order for us not to fight, we are not going to talk about any club whatsoever. This is just going to be football. That is team A against team B. Or rather, since we're talking about the foreign exchange market, let's talk about the buyers versus the sellers. Great. Now, you know the buyers want to win, just like the sellers want to win as well. So as they both want to win, the buyers want to win by taking the price up, and then the sellers want to win by taking the price down. Now, at the start of the football match, at the open, this is the open here, at the open of the football match, when the referee blows start, nobody is winning. It's basically 0-0 between the buyers and the sellers. But let's assume that the sellers score a goal. If they score a goal, it will be 1 goal to the sellers. What direction do you think the price would go? Don't forget they're doing a battle between the price. The buyers and sellers are doing battle for the price. So if the seller should score a goal, it probably would go down. So that will be 1-0 in favor of the sellers. And then what happened? And then the buyers scored their own goal, and then they made it 1-1, and it's now what? Back to neutral, 1-1. And then what happened? The buyers kept on scoring 2-1, 3-1, 4-1, 5-1, 6-1, 7-1, 8-1, 9-1, 10-1, 11-1. And then when they scored 11-1, the sellers now they got the opportunity to score another goal, 11-2, and then 11-3. And then the market closed over here. So you can see what happened. This is explaining a football match, right? Where the buyers and the sellers are doing battle, and then before you know it, the highlight is as it goes in this manner, right? Where you have over here where the buyers took it to the highest point of scoring about 11 goals, and over here the highest point, or rather let's say the lowest price that the sellers took it to, they were able to take it down just by 1 goal initially. But then the main story now has to do with the open and the close. You can see that the close was higher than the open, and this is in favor of the buyers. This is in favor of the buyers. And then the opposite is the case over here, where the close is lower than the open. The close is lower than the open, and then this is in favor of the sellers. Now this is just a quick explanation on how these candlesticks were formed. I hope you have that idea and you have a better understanding of how these candles were formed, because it's very, very important. All you have to note, number one, is that the participants here are the open, the high, the low, and the close. The open was when the match started between the buyers and the sellers. The highest point here was the point where the buyers took it to, the highest point here, and then the lowest point here was the lowest point where the sellers took it to, and then the close showing who won. So since it closed higher than the open, then the buyers won. And for this other side here, since it closed lower than the open, then the sellers won. Very simple, and I hope we understand that, because we all need to understand how a candle was formed. Now, as a matter of fact, how did these candles, how did they come about? What is the history behind these candles? Because back then, a lot of traders were using more of the bar chart. But there was this individual who goes by the name of Steve Nissen. Steve Nissen, he went over to Japan, and then he noticed that they were using what was called the candlesticks, because these candlesticks originated from Japan. And then he brought the candlesticks to the Western world, and that's why he's known today as the father of the candlesticks, right? He's known today as the father of the candlesticks. Steve Nissen, just a quick history on how the candlesticks came about, right? And then now, these candlesticks in question, how do they help us? They help us by being a footprint in the sand. When you have footprints in the sand, it gives us heads up as to the next possible direction to go, as the next possible move in the market. And that is how powerful these candlesticks are. They help us to know the next possible movement in the market. And once we know the next possible movement in the market, obviously it will be good for us so that we can take advantage and make some nice cool cash. And obviously that's why you are watching this video, to get the information on everything you need to know about the candlesticks and how to properly use it and to make money from it at the end of the day, right? So these candlesticks obviously would help us to read a chart. It will help us to read what is happening in that chart, because if you look at this chart in front of us, we have a lot of candlesticks here, and as you have a lot of candlesticks, it's just going to be like episodes in a series. And before you know it, when you look at a candle, the next candle, the next candle, it now gives you the total story of that chart, and it is definitely going to help us read a chart. And that is the major advantage of these candles. Major advantage of these candles. Now, meanwhile, we have some certain candles, because these candles are formed once again based on the battle of the buyers and the sellers. Now, there's some battles that you see that gives us heads up. This battle could be in the form of one candle, or two candles, or three candles, right? And this gives us heads up as to what is going to happen next. Now, if you look at the first diagram that we have here, which is known as the bearish engulfing. Bearish engulfing. That means that this candle here engulfs the previous one. It swallows at least the previous one. It could swallow some other candles by the side as well, or at least it swallows the previous one. And then it's bearish. Bearish means selling, meaning that it's going down. Bearish already gives you that heads up that it's going down. So this is a bearish engulfing, meaning that it is now time to follow the downward manner. It's now time to use this two candle formation to sell, right? You have lots of different ones. Now the opposite of this bearish engulfing is the bullish engulfing, where we have this candle engulfing this one and maybe some other candles by the side as well, and giving us heads up that it is time to push higher. Remember, we said that these candles could be in the form of one candle, or two candles, or even three candles. Three candles with respect to the three white soldiers and three black crows, and so on and so forth. And then we have the popularly known candles known as the hammer. One candle, as you can see, this looks like a hammer. You can have it as the hammer, or it's also known as pin bar. Pin bar gotten from Pinocchio bar. Pinocchio bar telling us that this candle that we can see is lying. and as it is lying, instead of it moving in that upward direction, it's about to go in the opposite direction, right? Instead of it moving up some more, it's now telling us that it is now time to reverse and now time to go the opposite way, which is down. So these candlesticks, they help us to read the market like a book. Trust me, by the time you go over these candlesticks and then you have a better understanding of these candlesticks, and then you carry these candlesticks to a chart like this, now what can we see and what can we say about this chart in front of us? We can clearly see and state that the direction of these candles, right, ultimately is moving upwards, meaning that this chart has helped us to see with the aid of these candles that the direction is up. Now, as the direction is up, what are we looking for? We're looking forward to buying. Now, as we're looking forward to buying, where do we want to buy? We want to buy, right, where we have those candles indicating that it is time to buy. Don't forget, those candles are footprints in the sand. So we have those candles that are telling us it is time to buy, and we have those candles that are equally telling us that it is time to sell, right? And that is the beautiful thing about these candles, the footprints in the sand. Whether the trend is an uptrend or whether the trend is a downtrend, we will get to see this movement using the candles, and these candles could even position us to trade either with the trend or against the trend. What does that mean? That means in an uptrend we could simply be buying, or in an uptrend we could simply be selling with the aid of these candles. And also in a downtrend we could simply be buying, or in a downtrend we could also simply be selling, depending on what you want to do and depending on the candles that forms that gives us the heads up on what should happen next. And that is why, looking at these candles over here, you can see that they're already giving us a heads up. Now these are the key candles, these are the main candles that most traders normally use. Either the pin bar, also known as the hammer, or any of the engulfings. Either it's the bullish or the bearish. Don't forget, we said these candles would help us to enter the market to buy or to sell. So when we say bearish, bearish means selling, and when we say bullish, bullish means to buy. So these candles, they give us the indication of the next possible direction of price. Is it going to be going up? Is it going to be going down? This is simply what these candles help us to understand better. And looking at this example here, if you look at it closely, you notice something. You notice that initially the market was going down, and then as it was going down, we now had what? We had the hammer, also known as what? As the pin bar, the pinnacle bar. Now let me even tell you the reason why this is also known as the pin bar, pinnacle bar. Now if you look at this shadow here, also known as the tail, right? Now this wick, also called the wick, you can see that the longer the wick is, the more it is lying, and that is gotten from the story of the Pinocchio cartoon that we all know. I believe we all know, right? Now the story goes that the more Pinocchio lies, the longer his nose grows. So that means that the longer this wick is, the longer this tail is, the longer this shadow is over here, is telling us that this candle is lying and is about to reverse. Now it could be a partial reversal or a full reversal, who knows? But the candles are giving us possible heads up, and that's what they call footprints in the sand. Now looking at this other example that we have in front of us, if you look very well, the same thing applies over here. And look at what we have in front of us. It was first of all moving upwards, and then we had this candle here that got engulfed by this one, and this is a bearish engulfing. And then before you know it, a bearish engulfing in an uptrend, telling us it's time to sell, and then we sold, and then the market went down. Trust me, all you have to do is start to look for these candles, and then you start to find them, and then you start to understand them better, how to properly use them. These candles, I repeat, are footprints in the sand, and as the footprints in the sand, we need to use them, and it will help us to enter the market appropriately. Now when it comes to entering the market, we need to know where exactly we're supposed to use them to enter the market. We need to know where to use these candlesticks. Where are we looking for these candlesticks that will give us good heads up as to entry? And that is where we'll be introducing in the next possible video support and resistance. Support and resistance helps us to understand where we're looking for something. You just don't go about looking for these candles, the pin bars, the engulfings, the three black and the rest of those candles, the doji, spinning tops, and the rest of them. You don't just go looking for them anywhere, but you must find them at particular places. And where you want to find these candles would be in our next possible video coming up shortly, and that will be based on support and resistance. Once you understand support and resistance and you add that to your price action candlesticks that we've already talked about here today, it will give you more power, it will give you more information, it will give you a better heads up as to where to enter this market to place trades appropriately. And before you know it, trust me, you will be better at this. You will understand where you're looking for these candles, because you have already trained your eyes to know the candles in question. Not all the candles are important, but you trained yourself to know the important candles and then where to find them, and the rest is history, right? So I want to say thank you for paying attention to this short video. Well, I don't know whether it's short. I believe this is about 10 minutes, but thank you for paying attention to this video on everything, all you need to know about the candlesticks. Let me say that again, and let me say that the proper way. Everything you need to know about the price action candlesticks, right? And not the normal candlesticks that we have. Come on, Tolu, come on, get it together. Price action candlesticks, yes. So we will see you same time. Make sure you watch this video over and over and over again. And if you feel this video you got something out, meaning that we're able to convince you more about the business and not to confuse you, ensure to subscribe, to hit the like button, and of course don't forget to share, so that you know when next we have another video coming up, and so on. Thank you. Enjoy the rest of your day. Once again, this is Tolu, and I'm signing out. Good morning, good afternoon, or good evening, depending on where and when you're watching this video. Enjoy the rest of your day. Goodbye.